There are some massive names that you guys have been asking me about that have just cratered down in stock price in a very short period of time, despite the fact everything else has seemingly been going to the moon for the past month or two. And you guys want to know, are these stocks at 52-week lows or close to 52-week lows a massive opportunity or a huge trap? So I'll tell you if I think there is a massive opportunity in these 6 stocks at these lows that they're at right now. Kind of back to think about meta time frame. Is it like that? Or is a huge trap that you need to run away from because the hype train that always follows these style stocks is going to kick up, but they're not worth it at all and you should be cautious. Just make sure you like the video if you like getting the truth out the hype, because that is exactly what you're going to get today, guys, in regards to these stocks. Might agree, might disagree. Of course, comment down below with your actual thesis for the stock if you do disagree, so that way I can learn a little bit more, because obviously I've not done as much due diligence as a lot of you guys have on these stocks, depending upon the stock that we're looking at here. So keep in mind, on any list like this, I don't care about 52-week lows, just like I don't care about 52-week highs either, or all-time highs, or anything else of that nature. A stock can still be significantly overvalued even at a 52-week low, and kind of vice versa, right? A stock can still be undervalued despite the fact it's at a 52-week high. So you have to kind of keep those things in mind. That these are nice to maybe look at. It's kind of like a primer, like oh, that stock's at a 52-week low. Let me look a little bit further. But that's why valuation is so important, because there's a lot of stocks that hit 52-week lows and they're still way overvalued. You saw that all the time in 2021. And guess what? We're in that style market again, where a stock could be cut in half and it's still way overvalued. Even some of our favorites are in that spot right now, where a 50% haircut, it's still a little bit overvalued from a valuation perspective. Doesn't make it a good buy or bad buy. Depends on the stock. But nonetheless, 52-week low doesn't tell me a whole lot in regards to valuation. So always keep that in mind. That is kind of the angle that I'm coming from. And that's always my mindset with every single stock that I look at, every single stock pick that I study, every single buy that I make. 52-week low, 52-week high doesn't enter the equation at all. Not something I care about or look at, but these stocks are at those places. That's why you guys are asking about them. So let's talk about them. And let's start with the first stock. That is Costco. Now, I think this right here is a great place to stop and take a look at the company itself and what style stock it is. If you're looking for a dividend play, this right here is a solid dividend player. I don't think people are going to magically, quit using Costco and Costco's on its way to bankruptcy or anything else of that nature. But it might be some other stocks that might very well be in that boat, that category, but it's not Costco. So I don't think there's a threat to the dividend right now. I don't believe there's any significant, business problem or anything else of that nature. It's just part of the slowdown in the overall economy that we are seeing. And of course, a stock that's kind of fallen out of favor as well, which really a lot of the dividend stocks have been falling out of favor all year long. There's some great companies out there on some incredible discounts, but you got to be patient with these, right? These are not 10x stocks. I know some folks are out there positioning them like that. Dividend style stocks are not 10x stocks, okay? Sure, you end up with gems like we found with 3M, where you end up with a double up in a little bit over a year here, or even JP Morgan, right? We bought that one and we're on basically a triple up or almost a quadruple up in just a few years on that one. But those type situations are very, very rare for you to get a high quality business at a stupid, ridiculous valuation where you can make that sort of money and price appreciation. I don't think you're gonna get that same sort of appreciation with a stock like Costco. Now, I'm happy to be wrong. It's great. But for me, just make sure you understand the business problems that they're having right now, and then kind of look at it. Do you believe management can turn this stock around or not? And then kind of proceed from there. Again, these aren't 10x stocks, so it's not gonna turn around on you real fast. These things take time to come back around. Right now, these style stocks are out of favor in general. Add in some business problems, and that's where you end up in a situation where a stock like Costco is hitting a 52-week low. So stock number 2 is Berkshire. All right, Buffett decided to step down. We all know that, and I knew it was one of those things to where Berkshire was going to go down some. It was just going to put downward pressure. You can't take the greatest investor of all time, remove him from the day-to-day operations, regardless of how removed he was before. You just can't do that. It's too big of a figurehead, too big of a name, too big of everything, right? The greatest of all time in regards to investors, widely, believed to be that by most people, leaves the company, and all of a sudden you're not going to have share price, pressure on the share price, beating it down there because you no longer have that guy in charge. Now, of course, he's still working with them. Absolutely. Obviously, he's going to be available by phone. He's not going to be around forever either, guys. You got to kind of keep that in mind as well. But coming back to Berkshire, do I think the company is in a great position? Absolutely, I do. I do not believe any of the folks that have come in and have honestly been taking over a lot of the operations for a lot of years here, are going to dramatically shift how Berkshire does business. I don't believe they're going to dramatically change the business, nor do I think there's going to be a significant drop off in the business as well. Now, of course, I could be wrong, but nonetheless, these guys have been making decisions and been involved in the day-to-day for so long now. I think we would have seen bigger cracks in Berkshire's business and the fund itself than what we have seen over the years there. So I have no doubt that this one right here might be, again, not a 10x stock, but definitely you're getting very good pricing, and that pricing might very well get better as the market draw down, as people start to question more and more of what's going on. So obviously do your due diligence on this one right here, but I do believe that the beatdown is kind of unwarranted right now. It's more about, Buffett stepping down than anything else wrong with the business itself. And it's a great, great, great business. So stock number 3 is McDonald's. All right, here we are. Another dividend player, another high-flying stock back in 2022, and it has fallen completely out of favor. Now, I know this was all the rage in 2022, guys. I remember I was busy buying Palantir and SoFi, and a lot of folks were like, why aren't you buying McDonald's? It's at all-time highs. It keeps flying up. It's moving fast, SoFi and Palantir are going one direction and McDonald's is going the other direction. Well, that also was a product of the market there. And I didn't want anything to do with McDonald's then. But if it continues to fall down, again, another dividend play there might be worth a look for some of you guys out there. Now, it is not a growth name. I don't know how many more McDonald's they can put out there in the world. I've been all around the world, traveled to, I don't know how many countries now. Tons of them. I've never not found a McDonald's anywhere in the world, or at least seen it in regards to it. So I don't know how much more expansion they have, how much more growth they actually have. It might very well be just a flat business for a very long time, maybe even a downtrending business for that period of time, unless they dramatically shift the business somehow or create the next innovative, dining experience, however the heck you want to term that. That right there to me is kind of the risk factor there with McDonald's. It's not whether or not it's going to continue to print money or not. Of course, it's McDonald's. People are still going to eat it regardless of how terrible it is for you. It's not like we hadn't known that for a long time, guys. But the business itself, to me, doesn't have a lot of growth. I wasn't interested in 2022. I'm really not interested in it now either, because to me, it's not even just a slow growth. It's not even a staple. Unfortunately, it's not a staple. It's obviously a staple of some people's diet, but it shouldn't be. And so for me, it's just one that I don't know. I mean, the valuation would have to get to a ridiculous level to where I would even consider it. But even then, I don't think it would make my list, just due to those growth prospects, just due to the fact that if it's beaten down to that level, probably there's some other hidden gems as well that have far better growth prospects in the future that I would much rather buy instead. So for me, it's one I'm staying far, far away from. Stock number 4 is Duolingo. Now, this one has simply cratered down from just a really, really big hype run just a little while ago there, but I didn't understand the run then, outside of the fact the entire market was running, obviously, as we've all gotten to enjoy that ride up. But I didn't understand why this particular business in general was running versus some of the others. I'm not necessarily sure I buy into all the, hey, AI is going to replace it or things of that nature, although we'll get there one day, right? That doesn't mean they can't shift the business in the meantime in order to accommodate those shifts. But for me, bigger picture there, I don't know what the market is for folks wanting to learn new languages and things of that nature. I understand it's a large market. Clearly, you can tell just simply by their revenue numbers that it's a large market. But I'm talking in terms of growth and in terms of the valuation you're paying for it. Despite the massive drawdown that it's had, it's still trading rich from a valuation perspective. So why do I want to pay a premium for a business that doesn't have a massive TAM like a Palantir does or a SoFi does, for example? A lot of other companies out there are looking at these massive TAMs out there that for them to tackle in spaces that are obviously going to continue to grow massively into the future. I'd much rather pay a premium there than I would pay for Duolingo here. So for me, it's got to fall a lot further for me to have any interest in it whatsoever. And even if I did have interest in it, it would probably be more for a swing trade or something of that nature. It wouldn't be for a long-term buy and hold. To me, the TAM is just too small to go after. And there's not enough of a, I won't call it a moat, but enough of a cushion there in regards to what they can go after for me to have any interest in the stock. So for me, it's one I'm probably out on, probably going to be out on in the future. Not saying it's a terrible stock or anything else of that nature, but it's just one that it doesn't fit my strategy, doesn't fit my goals. And I believe there's better opportunities out there, especially if I'm going to be paying a premium. So stock number 5 is Salesforce. Now this one to me is interesting. I'm not going to say that I want to go for it yet. It's definitely one that I have looked at before. Didn't like the valuation at all. They have some business problems. Obviously there's pressure on the business itself. I believe all the AI is going to replace it hype is overblown, per the usual with AI, right? Everybody said the same exact thing about Google. Yeah. Thankfully, right here on this channel, we weren't buying any of that trash. But Salesforce has started to stagnate. They've got to transition the business in a way that makes sense to kind of get them into that future state so that way they aren't replaced by AI or other products. But a lot of the bear narratives I've heard are kind of silly. They kind of don't align with what Salesforce actually does and what they actually provide to the business consumer out there, not us as personal consumers, the businesses that are out there. It's not exactly easy to replace, at least not nearly as easy to replace as everybody out there is making it to be. And more importantly, you're talking about enterprises and things of that nature. It just, to me, this one right here might, especially if it gets cheaper, might very well be something that I look a lot harder at in the future, because there could very well be a massive opportunity for a great company, well known out there in the space, and something that could have the potential to turn that corner and really see numbers increase, see everything kind of move in the right direction there, and you got it on a great discount. It's not there yet, but it's definitely one I got a side on and kind of going, hey, I'm some of these other businesses right here that we're looking at, I don't really have a lot of interest in for a variety of reasons, but that one right there is definitely one to where if they can turn that corner and if we can get a cheap enough valuation, the risk reward becomes too great for me to at least not take a harder look at the stock. And number 6 is UPS. Now this one kind of goes right along with the McDonald's, everything else going on. Now, obviously they had the crash. I'm not going to discuss that. But UPS is another dividend player. It's not like people are going to stop using UPS, right? UPS and FedEx are vital to, especially folks like myself, business folks, who have to, you can't trust the post office here. Sorry, postal folks out there. I couldn't tell you how many times, every time I'm getting something sent to me, whatever the case is, if it's UPS or FedEx, with rare exceptions, easily tracked, always gets here, package is always in good shape. When it goes the other way, it's kind of 50-50. I've had things never show up. Things get lost. Obviously, some things showing up and you're just like, oh my gosh, what the heck happened here? The box is torn apart, kind of halfway taped back together. I don't know. It's just a mess. All the way around. Tracking, of course, it becomes a lot harder. I know they're trying to improve that, but businesses like UPS and FedEx are absolutely vital to tons and tons of e-commerce. So I don't see it as a bankruptcy risk or anything else of that nature. However, they do have some business problems that they need to solve. Obviously, there's a lot of debt there as well that, they need to deal with appropriately and appropriately, maneuver the balance sheet to where those don't become albatrosses on the business, but just simply part of operating the business. So there are some challenges there. I'm not saying it's not without risk. But if you understand those risks and that valuation, you like the valuation. I haven't done a valuation on UPS yet, so I couldn't tell you what it was. But if you like that and you understand the risk reward with this style stock and you're looking for a dividend player, again, it's not a 10x stock. Got to keep that sort of stuff out of your mind there whenever you're buying stocks like this. Understand the opportunity there and see if it's right for you. For me, it's definitely one. I don't have any interest in that particular line of business. So I'll be staying away from UPS regardless of what happens there. And if you want to see my complete watch list with price targets and get all my buy and sell alerts in real time, I may have left something special for those of you guys that stuck around this long down there in the pinned comment down there where you get access to my group. You get access to free courses, free coaching, all the buy and sell alerts, my watch list with price targets. I had stock rankings in there just of the stocks that I own. Guys, there's so much involved in the group. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.